you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite low.
Welcome back to Real Estate Mindset. You may want to have a seat because I am going to get spicy, and I know some people anyways, are going to hate this video and hit the down arrow. But the thing is, guys, is I'm going to inject my opinion in this video, but we are going to look at all of the data when it comes to the housing market. The housing market right now is absolutely out of control. It is absolutely wild, and it is so important to understand the big picture. And so today we're going to go over supply, demand, interest rate, prices, unaffordability. We're going to compare and really look at the differences between new homes and existing homes, which is totally two different worlds. And then I'm going to end on telling you guys what we should be looking at, not the macro data. What we should be looking at is the hyper local data like subdivision analysis. So I'm going to reiterate how important that actually is. And for putting this a plethora of information together, can you hit me with a bonkers below? Don't even like the video. I don't even care anymore, but I do. And I would appreciate, just give me a bonkers. Give me a bonkers below. Either way, everything will be chaptered in this video. So feel free to access the data yourself. But where I'm going to start you guys is with demand. All right, so this is Mortgage News Daily. We're taking a look at demand, and we're taking a look at the demand from the aspect of existing home sales. So we're not going to cover new home sales data yet. And what I want to show you guys is demand has absolutely plummeted. Basically, total transactions to start 2022 totaled approximately 6.3 million units. You guys, we have gone all the way down to about 4 million units, and that's starting 2024. We actually ended 2023 less than 4 million units. But really what I want to point out, you guys, as far as demand, I mean, we're basically going back to the demand of the 1980s and 1990s. Now, we hit under 4 million during the GFC briefly, and we kind of went over that. So in other words, you guys, demand for existing homes is almost lower than during the worst time during the GFC. And the speed at which that happened is insane. Literally from 6.3 million units down to 4 million units in a relatively short amount of time, in about a year. So there's no doubt, you guys, they put a damper, massive damper as a result of the quantitative tightening, massive damper on demand. So number one, demand is in the gutter from an existing home sales transaction standpoint. Now we can also see how bad it is when we take a look at mortgage purchase applications. Now the orange line is interest rates. The lines that you can kind of barely see here are mortgage applications. And you guys, I'm going to tell you right now, we are well lower as far as mortgage purchase applications than the GFC. I want you to think about that for a second. And I'm going to say right now, the housing market's frozen. We will have price discovery when they lower interest rates. The high interest rates are keeping the housing market propped up. I'm telling you, high interest rates are preventing the housing market at this point from crashing. But look at how low mortgage demand is. It's ridiculously low. The last time it was this low was the 1990s. So it's worse than the GFC, going all the way back to the 1990s, just like existing home sales transactions. In other words, demand is crippled. That, my friends, is a fact. You can say right now that demand and transactions has crashed in the housing market. Which brings me to the next important thing, so we talked about demand going down. Now what's going on with supply? Now the good news is supply is going up, and it is going up greatly. Fortunately, not quite where we need it. And I'm going to tell you guys my conclusion on what I think is really going on as far as prices as it pertains to supply. But let's see the data first. First of all, what I want to point out is we hit a record low of active units in the US. Now, this is not new home data. This is only existing home sales. Look at back in February of 2022. We were only sitting at 346,000 units. We have now 664,000 active units, which means we have almost double the inventory. So long as we keep demand down to where it's at, inventory will continue to double. All right. So maybe 2-3 years from now, we have more. But I also want to point out all we need to go back to pre-pandemic is a little over 1 million units. But what I'm saying is all we need is 100 to 200,000 active units to start having additional price discovery. In other words, prices will go down if we have roughly 200,000 more active units than what we have right now. Take a look at supply. Now, supply measures both demand and supply. So right now we have 3.3 months of supply. This is a 4-year high for this period of time. So we have a 4-year high for this period of time for supply. Now, here's the issue, you guys. We need it to sustain. We need to sustain 4 to 5 months of supply for prices to go down, in my opinion. Now, historically, we need 6 months of supply for the market to be considered a buyer's market. So we're well off of that, unfortunately. But again, 4-year high for this time of year, sitting at 3.3 months. At our lows, you guys, we had less than 2 months of supply. So in other words, we have demand plummeting and we have supply going up, which brings us to the next thing, prices and interest rates. Let's start with interest rates, since that is literally leading everything else. Remember, guys, stage 1 is interest rates. Stage 2 is new constructions and transactions. Stage 3, prices. Stage 4 is inventory. But let's take a look at rates. Now, I want to remind us where we came from as far as interest rates. In January 7th of 2021, we were sitting at 2.65% interest rates. 2.65. In fact, my interest rate is lower than that on my house. 2.65% interest rates. Now, fast forward 3 years later, we're sitting at 6.62%. In other words, you guys, interest rates in 3 years went up 400 basis points, which essentially equates to 40% just from interest rates. I'm not counting prices. We lost 40% of purchasing power in less than 3 years. That is absolutely shocking. The trajectory, you can see here, the trajectory of these rate increases has been crippling. It's just, again, we haven't had enough time go by for the lag effects of interest rates to be felt in prices across the board. But regardless, interest rates have shot up, and historically, we're at under 5%. Historically, the last 10 years, we've been under 5% the whole time. So look at how much they've gone up. And this is leading everything else. Now, I will say interest rates have not been high enough. I know interest rates are not high enough because we had a rebound in 2023 and prices inflated once again. And when we really look at the deficit spending, it makes sense that we needed interest rates higher. Comment below, seriously. Should we have had higher interest rates? Like, should we have maintained rates in the 8%? Let me know what you think. Now, as far as what the market thinks, this is the year-end projection. And basically, they're saying 25% chance of 2 rate cuts, 40% chance of 3 rate cuts, and a 24% chance of 4 rate cuts. But I'm going to tell you guys once again right now, unless we have an economic crisis, they're not going to stimulate the economy by cutting interest rates. The only reason they're going to cut interest rates is if something bad happens. So you're not going to get the cut rates, significantly cut rates, unless something bad happens. In other words, unless you lose your job. If you don't lose your job, interest rates are going to stay high. You lose your job, interest rates will start going down. But by that time, unfortunately, it will be too late unless we plan ahead. Now let's move on to the greatest thing of all, you guys, prices. Now, after prices, I'll go in and compare new homes to existing homes, and we'll look at all the data. But let's go back into prices. And I'm going to tell you guys right now, from a median sales price standpoint, we didn't reach a new high this year. Did y'all hear me? We did not, on average, macro data did not reach a new high. Let me show you. All right, guys, so here's the U.S. existing median home sales price. And it's important to note that we peaked in June of 2022 at $413,800 as far as median sales price. You can see that in the chart right here. However, we didn't hit a new record. We got to, in June of 2023, $410,100. That's a difference of $3,700. So all the people like, yeah, the housing market completely rebounded. No, it didn't. Here's the data. It didn't rebound. And also, prices did go down from June 2023 to January of 2024. They dropped, you guys, 25,000, or rather 6.2%. They've only recently in February started going up again. Did you know that? Did you know that we lost 6.2% in value from peak of June 2023 to current? Bet you didn't know that. Now, here's what everyone is celebrating, the year-over-year growth. You can see in February of 2023, median sales price was $363,600. So median sales price did go up on a year-over-year basis, $20,900, or rather 5.7%. However, when we throw in new home data, median sales price of homes sold in the United States is plummeting and never rebounded. Look at this chart. When we mix both data sets together, because when a new home is sold, isn't it an existing home now? Yeah, it is. So it's important to look at this data, even though the bulls don't want you to see this data. But maybe you want to look at the average sales price of houses in the United States on a quarterly basis. Look at this. No rebound. You guys, we're going to look back in history. We're going to look at data like this, and we're going to ask the US, why were you so crazy? Why did you have to buy a house right now? Look at the data. When we put it all together, we take a step back and we look at it, home values are still going down. But let's separate out now new homes. Because remember, you guys, not everyone is lucky enough, like I'm lucky enough, to be in metro areas that have heavy clusters of new homes. And what we see in Texas is we see the distress in new homes, the prices and the inventory in new homes spreading to existing homes and the prices of existing homes, because existing homeowners, in order to sell their house, have to compete with the new home builders. But nevertheless, new homes, very much so different than existing homes. So the question is, why? And I'm going to answer that. The reason is we've had 6 months of supply for over 2 years. And as a result of that, prices plummeting right before our eyes. Let me show you. This is the median sales price for only new homes. You guys can see that we peaked back in October of 2022 at $496,800. New home prices have dropped 19.3%, over $96,000. We're almost under $400,000. We're now sitting at $400,500. We are down over 7% year over year. Again, I say, we are down right now 19.3%. 19.3%. That's the data, you guys. There's no questioning that. 19.3%. And again, we don't have that with existing homes. Here's why. Look at the sheer amount of supply with new homes. Remember I said we need 6 months? You guys, we have 8.4 months, and this is underreported. They don't report all the information. That's a fact. I've traveled around the nation. I've seen with my own eyes, there's 2 to 3 times more inventory than what they're listing in some subdivisions. You guys, they may have a year, 2 years even of inventory. This is insane. But right now we're sitting at 8.4 months, and we've been this high for 2 years. And that, my friends, is why there's such a difference in discrepancy with new homes versus existing homes. It's the inventory. And don't forget this, you guys, it's not about macro data. It is about macro data if you kind of want to get a picture of what's going on in the big picture. But when it comes to you purchasing a home, it's always about hyper local data. And the way you do that is by accessing the MLS multiple listing service, and you do comparable sales analysis on property subdivision. A realtor can help you with that. Again, you look at all the comps, you look at all the comps, and comps is a home that has sold. Look at all the comps for 2023, 2022, and in 2021. What I do to kind of gauge whether or not I have people getting a good deal is I use 2021 data. If I get a purchase price of in 2021 values, I feel like maybe I'm winning, but I definitely know I have wedge. In other words, you guys, do your homework. And if you're going to buy, make sure you buy something with wedge and with cash flow. Now, let me show you a trick I learned with Zillow. You can kind of do a market analysis using Zillow. It's kind of a crappy one, but at least it gives public some ammunition. Now, you could do that with Zillow by basically going to the drop down. First of all, find a house that you want to buy. Go to the drop down, hit sold, okay? And then draw a perimeter around the subject property's subdivision. Okay, make sure you go to hit apply, make sure you go to more, and make sure that the last 3 years of comparable data is selected. Okay, and then it's going to give you all this data. Do the simple math, add it all together, get your averages, and figure out whether or not you're getting a great deal. But I'll tell you a little secret right now. More than likely, you're not getting a great deal because the housing market right now, you guys, and this is how I want to end, is absolutely ridiculously toxic. And if it's me, what I would like to say is if you can wait to 2025, do it, because we haven't even entered recession yet. We have a presidential election. Things are absolutely out of control and wild. And it's just smart right now to pump the brakes and take a step back, unless you're filthy rich. Whatever. If you're filthy rich and you don't care, fine. But if you're a normal consumer like me, we got to make great decisions. We can't afford to make a bad decision. And that's why I'm saying, time out, increase your purchasing power, understand how these things work, find a great deal. And again, you guys, if you're going to like this video, I'd appreciate it. My butt is kicked for how much passion I feel in this video. And if you're out there investing in real estate, you already know I wish you luck, and I hope you win.